You're watching Stockwatch this week. I'm Ntauleng Lechela. And joining me to unpack your stock-related questions today via Zoom is Kearabilwe Nonyana from PRIMEXBT and Rowan Williams from Nitrogen Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch. Gents, thanks so much for your time this afternoon. Earnings season in the US is picking up. The two reports that caught my attention, of course, being Netflix and Intel. Let's start with the chip manufacturer, right? A lot of hype, a lot of confidence leading up to the release. It topped market expectations, but the soft guidance seems to be spooking investors' gear.
Yeah, no, it's down about 12% pre-market trade right now. And I mean, yesterday, even posted the earnings, it was down about 6%. So, I mean, in totality, it's almost down 18% in the past 24 hours. And when you look at the Q4 numbers, I mean, there was really good stories to tell. I mean, the chip maker really beat on top line, beat the street's estimates on how much EPS it will generate in Q4. I think it's just the forward guidance which was given at the investor call that essentially really spooked the market, and we saw that sell-off. That Q1 revenue numbers may be very benign and may come in quite flat. And I think right now the market going into the next week is anticipating the tech companies coming out with results, and I think it's just positioning itself for that, because I mean, since the beginning of the day, the market started off in the green, but right now, right across the board, in Asia, in Europe, it is just red right across.
And I've been struggling to make sense of market action today, because you would have thought with the ease in geopolitical tensions that rally would hold. But I am seeing some of those gains tapering off. Let's get your views around Intel, Rowan. Also, the guidance assigned is Intel too big to fail, considering its critical support in national security and also the importance when it comes to the US's semiconductor independence? Rowan, I'll give that one to you.
Yeah, certainly. I mean, we saw the US government taking a fairly substantial stake, and I think when the share price was particularly weak, and maybe it appeared that there were sort of significant difficulties for the company, there was a backstop from the US government, which just shows their strategic value, as you say, to US semiconductor manufacturing capacity and prowess. So I agree that it is too big to fail, and it has got that sort of US government underpin to it, and I guess it'll get support, tacit or otherwise, support from other US tech companies for its chips. So it's obviously had a very difficult period. They seem to be working through that. Obviously, chip demand is helping significantly. They've missed sort of the major boom and are trying to catch up. And they have been doing a fairly good job, the new CEO. So, but what I think is showing is that the pressures in terms of demand, they cannot actually keep up. And they have constraints, they have supply constraints, and so that is weighing on the ability to grab the market opportunity and actually to achieve the sales forecast that the markets were expecting, and hence the quite significant slowdown, I guess, sell-off, because if they don't have the capacity, how long will it take them to build the capacity of these foundries and sort of chiplet supply? It's quite an intricate supply chain. So overall, I think, and it may be we see it with some of the other players, almost the demand is too big to sort of capture or be fulfilled. And there may be some more disappointing numbers to come.
Yeah, and I wonder how long it'll take the group to actually catch up to its competitors then, if that's the case. Now let's look at Netflix, also out with numbers this week. It gave us insight into their subscriber numbers, boasting subscribers of about 325 million. Ad revenue also looking good, even though it is still a small portion of total revenue. It seemed like a good set of numbers, Rowan.
Yes, certainly. I mean, what we're seeing is these big tech players, the Mag 7 players, have got significant momentum in their businesses. It's really the bigger getting bigger, the network effects, where sort of other cable operators or smaller streaming operators are struggling to get market penetration. So this is a type of market or industry where sort of the winner takes most of the industry, and clearly those sort of 18% revenue growth numbers thereabout, exceptional for such a large business, and given their penetration already globally. So they're finding new levers to pull to continue to grow that revenue. I guess on the flip side, they're having to invest significantly in content to keep those subscribers engaged, which includes spending a significant amount more, plus potentially making huge acquisitions, Warner Brothers. So that's quite, divisive at the moment. It looks like it's quite a battle against Paramount. So that would be interesting to see how that unfolds, so creating a little bit of uncertainty. But certainly they're in the market, and it's been a great investment.
And just your take on the acquisition in particular, Gia. Netflix also offering Warner Bros. An all-cash bid now, while Paramount, of course, is still in the picture with a competing bid. Talk to me about that. Netflix would, of course, be taking on a lot of debt as well.
Yeah, no, and I think Warner Bros. Board have told the shareholders that they prefer Netflix all-cash bid. And I think right now, when you're looking at the credit lines, which have started to be extended, you start to see how much money they're going to actually need to raise to be able to actually bed down that acquisition. And as Rowan said, I don't like the sector just purely at the level of capex all the time. And when you look at the number one used platform on US TVs right now is YouTube.
Yep.
And YouTube does not need to essentially have the same amount of capex. So, I mean, the competitive landscape for these businesses is so vast that they have to invest in so much capex for new content in order to retain, first of all, the subscriber numbers they have, and also grow that the subscriber base. And I mean, if you look at it right now, I mean, I have young kids. I mean, they're always on YouTube. I'm probably always also watching YouTube. So, I mean, when we think about it, sometimes you even think, why do you pay for all these subscriptions if YouTube gives free content and really has limitless possibilities on what you can watch? So I think really for me, in this space, I'd rather go for Alphabet because of that YouTube asset.
I must say, finding out that Netflix's biggest competitor is YouTube was really mind-boggling, because I never thought of that. But when you really do think about it, it's YouTube. It's not any other of the streaming services. It's, in fact, YouTube. All right, let's move over to some company news, local company news. That is, yesterday we got an update from Sasol Gear. It closed 14% higher following that operational update. Today, slipping in the red. Is this perhaps a chance to get in? Or, you know, are you just like perhaps the cyclical nature of this stock will you're already shaking your head, so I guess it's a no.
Yeah, no, I mean, it has come down from like 120 odd, and there was some selling after the JP Morgan report by Alex that came out to say that they've moved it from neutral to underweight, and really that saw a great market sell-off, and I think it was quite a big institutional investor which had a big position on Sasol, and on that one Friday we did see quite some offloading. So I just think right now, in terms of the update, I think the market there was probably a lot of short covering, in my opinion. I think a lot of people rode it down from 122 to 100, and right now they were just having to cover their positions with a lot of short covering. I don't think it has to do with the management itself, because I still think there's a lot of high execution risk with that business, and I wouldn't touch it with a 10-foot pole right now.
What do you make of that update, Rowan? Is, Sasol one of those trading stocks, or are we starting to see some of those turnaround efforts bearing fruit?
Yeah, so I think what the market likes is that their more recent sort of production figures have been more reliable, in that they are meeting their forecasts, and in some cases slightly ahead, so it was a bit mixed. But it does appear that sort of management guidance and execution is getting better, and that does, I guess, bode well in terms of sort of the stability of the business. It is a very challenging environment. I think oil prices, I think there's generally downward pressure on those chemical prices as well. They do still have issues in terms of gas supply, so those aren't going away. And you add the strengthening rand dollar. Obviously, their earnings are largely dollar-based. That's also going to put pressure actually on their nominal rand earnings as well. So I agree it is a trading stock because of the high gearing and sort of the geopolitical sort of inputs in terms of the oil price movement. So I think we're going to see it moving in a range. It's certainly, it's a lot of volatility, a lot of liquidity. And until we sort of maybe see a sustained improvement in sort of production or, a firming oil price more sort of sectorally or, in terms of better outlook, it's going to be quite a volatile stock.
And those currency headwinds was one of the risks that JP Morgan had flagged. And that segues us nicely into the next question. Concern here around the rand hedges and the kind of impact the stronger rand will have on those companies' earnings, Rowan.
Yes, I mean, it's been fairly remarkable, the rand movement and the continued strength. I mean, we're seeing it potentially move under 16 to the dollar, which we haven't seen since 2022. And it's been fairly sustained. It's not like there's been a sell-off. I mean, we see small sell-offs when there's a kind of risk-off environment. But as that sort of abates, we see like it come down even further. So I think the market to some extent is underestimating the extent of the move and the impact that's having. There's some anchoring, and obviously just given the historic reporting that companies have, it's 6 months behind potentially, and there's sort of average rand dollar rates at which the earnings have been converted. So, but if you look at spot rand and spot earnings, they are quite a bit lower without the business doing badly. So, like Bidcorp as an example, great business, but the rand reported earnings are just going to be quite a lot lower. And there's a Naspers process. There's a number of examples, and obviously the miners, interestingly, have been they've been defying, I guess, a strong rand to some extent. So I think there could be sort of just earnings surprises which are negative, but they will be delayed, which is interesting. So it may take time to play through to the actual market action and market prices.
I was looking at it today. Those gains were broad-based, gains against the pound, gains against the euro as well. So it also speaks that it's not necessarily just a weaker dollar story, but for today, right? So your sense around how this will impact, I guess, those rand hedges?
I think the story for 2025 in terms of currency is that I think the market wanted to be currency neutral, meaning being any other asset but cash. But when you're in cash, be outside of the dollar, and you would anticipate that you would have seen rand strength against the dollar, but it's really strong against every single currency, even other emerging market currency. And because of the high liquidity it has, I was looking at the option pricing on 3 month forward. And you're seeing that implied volatility is the lowest it's been since 2016. And if we remember in 2016, what really happened under the Jacob Zuma administration, which means that the rand is going to, in my opinion, continue to strengthen and might even get below the 16 rand to the dollar. And as Rowan said, I think for me, the miners have kind of been shielded by stronger commodity prices, because if you really had to look at the difference between the strength in that commodity price versus the strength in the rand, you've kind of seen that the commodities have been well stronger than where the rand has been. But I think it's going to be in the latter companies like Naspers, Process, companies like Bidcorp, where the rand strength is going to affect the rand-based earnings. And I think the market has really put that into the fore, and you're seeing it in terms of the companies like Bidcorp being really very, very cheap, and have been very, very cheap for some time going into the end of 2025.
Honestly, I'm crossing fingers that it continues to strengthen. European summer's approaching. Some people want to travel. Hey, that exchange rate, I'm hoping it stays where it is at the moment. Let's look at this next question here. Blue Label versus banks. And I'm going to start off with you, Rowan. Viewers saying, considering where to allocate a high-risk 10% in 2026, either Blue Label, betting on clean operations, strong cash generation, no debt, and a possible dividend for about 30% returns, or a big bank, ABSA, appealing to ride a SA Inc. recovery targeting 25% amid rate cuts, low inflation and GDP growth.
Yeah, so it's interesting. I think they're quite different investment prospects. I think that as the viewer pointed out, the prospects are good, and I think the potential for returns is good. And for me, there is high probability of achieving that return because it's clear to sort of see things moving in the right direction, financial conditions improving, and the local economy should pick up, and ABSA in particular should be a strong beneficiary of that. So whereas Blue Label, that is quite reliant now on Cell C in terms of it still has a large stake in it, managed to get the listing away late last year, so that was quite positive and raised some capital, not as much as they would have liked, but I think the sort of improving sort of indicators and prospects for the business also sort of well outlined by the viewer there, so it should improve, and I think the potential for returns is higher from the Blue Label opportunity. So if they're talking a high risk 10%, that's probably it fits the bill for that type of investment where I think the ABSA investment's actually a low risk, safer bet. So maybe that's for the rest of the portfolio, or the other more speculative investments besides ABSA that they could look at.
And piggybacking on Rowan's thoughts around banks, looking at the sector as a whole, you know, with the SA economy expected to continue to grow, SA banks likely to be the beneficiaries of that as well. We've been seeing a few of these banks doing some M&A activity, particularly ABSA and Nedbank, looking for growth in East Africa. Just your sense around that economy, of course, expected to grow exponentially.
No, I think it's quite astute that both management teams believe that East Africa is the new frontier. And if you look at just where Kenya is, Kenya's purported to grow about 5 to 6% in 2026. And if you compare that to South Africa's growth, I mean, that's exponential, as you said. And I think they're going into, I mean, you look at Nedbank just selling off the business in Nigeria and going right across into East Africa and buying a bank with a better return on equity than they have. So I think Mr. Quinn has something and he knows what's going on the ground. And I think Kenya as well, having operated under Standard Bank and really looked at the operations in that part of the world, I think Standard Bank still competes very well with their brands in East Africa, and it's going to be a tough job for ABSA and Nedbank to want to pip them out of that. But what I also have seen as well in terms of traveling in East Africa, it's very competitive banking space. I think there's the small regional banks, small entrepreneurial banks,
and the
that
fintech
I think
players.
sometimes you never discount, and very great fintech players. I have a lot of friends in the fintech space in Kenya, especially in the crypto industry. So I mean, there's ripe opportunity there, but I think they need to be more nimble. Looking at even the mobile operators who operate there, such as M-Pesa and as well as Momo as well as MTN's Momo. So a lot of competition there, a lot of growth. But I think they need to be more nimble if they're going to be on the ground in East Africa.
Talking acquisitions, one investors are not liking in particular, Mr. Price vying for NKD in Europe. You know, despite pushback, despite the share price falling, does this deal make sense to you, Rowan? Many arguing that this could be another example of a successful local company falling internationally.
Yeah, and you're right that there's been sort of a long history of failed acquisitions outside of South Africa in the retail space. So you can certainly understand investors' concern. And I guess to some extent, it's Mr. Price is also saying they don't see further growth opportunities in South Africa. They made a number of acquisitions, which I think were well taken, and they've executed those well. But now moving into Europe, which is a market they don't particularly know that well, haven't operated there. It's not an emerging market; it's a developed market. It's quite mature. Growth rates are much lower. There may be opportunity in the value space, just given the sort of high cost of living and increasing cost of living. But it's just a lot of uncertainty, and they're paying a very full price. And so the market needs a lot of convincing. I mean, in terms of the performance of the Mr. Price share since the announcement, sort of the market's voting with their feet, and sort of they don't think it's going to be a success and feel that they're destroying shareholder value. So there is a investor update, I think, in March that Mr. Price are going to do. So they're going to have to do, I think, a lot of convincing and explain how they can really get a return on this investment for them to get market buy-in. So, I think it's up to them to really demonstrate what they're going to do special that is going to make this different to other acquisitions that have been done outside of South Africa.
And Kay, I'm wondering if they managed to convince Alan Gray. I noticed that Alan Gray increased its stake in the company just yesterday. What do you make of that? Could they just be buying into the dip, or could they actually believe in this acquisition?
I mean, Alan Gray is famous for their deep value approach, and I'm guessing they're seeing deep value. And for me, is this a value trap, or is it truly deep value? Because for me, I don't like a tone-deaf management. I think there's been a lot of astute investment managers. Cy Jacobs sent out a letter from 361. We saw Benguela as well write to the management and to the JSE, really speaking to the management, because it just feels like deja vu. Another retailer going across the pond, and after going across the pond, they usually come back with the tail between their legs. And for me, this is just really a tone-deaf management. And I would also want to touch it because at that level of management execution risk, you're essentially keeping the management and not necessarily bring your own team to come turn around this business, which has been having 4 consecutive years of declines in profits. What really are you going to be adding as synergistic mix? You're really just paying management. You're just paying a premium so the private equity firm can get out of the stock. And for me, it really is a bad story, man. It's a very bad story.
All right, let's get into some positive news, I guess. Something you see value in at the moment. What is your stock pick here?
Yeah, no, so I think there's going to be market drawdown coming in, and I really have started to see in the option Greeks that there's a bit of movement in the gamma. So I'm buying call options on the VIX futures 22 price strike, in anticipation of that drawdown and an upward tick in volatility, and just hedging over my portfolio as an overlay to that volatility.
All right, what about you, Rowan? Are you going for a stock?
Yes, a stock. We like Sun International here. It's had quite a tough period. I think that's post potential, the threat of regulation in the online gambling space. So that is a very topical space, and it probably does need some reining in. But Sun International is one of the ethical players in the industry, and I think actually regulations may actually strengthen their market position. The share is very cheap as a result, and the tourism sector is trading well. We think the South African consumer will improve this year, and so the rest of their business, their core business, the land-based gambling, as well as the hotels and allied services are continuing to do well. The overseas tourism has been strong. We've had a strong season. The Cape Town particular strong, they're well positioned there, so I think at a P of around 7 and a high dividend yield of 9, it looks like an attractive entry point for us.
All right, gents, thank you so much for your time and sharing your insights with me this afternoon. Now, thanks to my guest, that was Kearabilwe Nonyana from PRIMEXBT and Rowan Williams from Nitrogen Fund Managers. Do remember that Stockwatch pre-records on a Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on a Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep your questions coming. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right on Business Day TV.